Good evening. This is Peter Rezicek from ShadowTrader.net and Weekly Options Advisory. In the current market, there's a lot of focus on AI stocks such as NVIDIA and others, and the fact that the S&P and the NASDAQ are constantly rallying to new highs. And the market is very, very strong. It feels like the market can do no wrong here. But there's a couple of charts here that are kind of pointing to the opposite that I don't think should be overlooked, and they're gold and bonds. And it's really bonds that I want to focus on. But gold itself is looking like it could be a long trade here, as we've tested this same area here many, many times. And this area is basically at the all-time high. If you go out to a longer term chart, like on a monthly, and go out 10 years or so, you can see where we are in relation to those highs. And it does appear from here that gold wants to push higher. And this is kind of flying in the face of what's happening currently with equities, in that, to me, the strength in gold indicates more of a risk off rather than a risk on. And that's also evident in bonds here. I want to show you this TLT chart, which I think is setting up for a buy here. I'm going to show you exactly how I want to play that. But if you look at the TLT here over the last few years, we had a rally recently, and that rally then failed a bit. We had this rally here, up here, failed a bit here, came into this higher low before bouncing. And then here's where things get interesting in bonds, is that after that, we just sort of dribbled lower. And we had this one day where there was a fake out move to the downside, trying to make a lower low, and it didn't work. And instead, all we got was this kind of rounded bottom to the upside, which I think is longer term bullish here in bonds. And it's interesting because the whole world seems to be kind of wondering about whether or not we're going to slip into recession or not, and what the Fed is going to do. But the bonds to me here are already intimating that there is a flight to quality happening here, and that there is some positioning going on where, sort of pre-recessionary positioning, I would think, in terms of bond prices, how they're firming up here. So what I'd like to do in this coming week is I'd actually like to buy TLT for a longer term trade. And then here's where it gets interesting, because these longer term trades, sometimes you want to hedge them, but I think that you really only need to hedge them for a short time period until you know that they've gotten out of the gate. So to me, the risk in bonds is certainly not from 94 down to here to 84. Certainly not. The risk is really only here from 94 to 92, because if we go back to 92, then what it's going to tell me is that, okay, the thesis is wrong and it's basically not time yet. And that's where things get interesting, because bonds typically, especially in terms of this TLT, this ETF that is for the longer bond, it has very, very low implied volatility, which means that these options are essentially cheap. And if you look at puts like going out to the end of, say, this coming week, March 8th, right? I put up a vertical here, but we don't really need that. You could do it as a vertical, but just buying the 94 put by itself costs you less than 50 cents. So the way you want to look at this is all you're really doing is tacking this price onto the price of your trade. And if bonds rally, as I think they will, obviously the put will go to zero. And again, all you've done is added 50 cents onto the cost of your trade. And if the trade is longer term, that's really not a big price to pay, right? You're looking at this bond chart thinking that it's probably going to move, say, at least $10 over time, right? There's no reason why it can't do at least to this high at 101, which would be a $7 trade. And you've got plenty of other resistances here higher, right? And we know that on a longer term basis, the TLT was as high as 160 or 170 historically, right? So it's really not that big of a deal to tack 50 cents or so onto the price of your trade, just to have that 1 to 2 week, depending on which put you buy, to have that 1 to 2 week safety net until the bonds, start to move in the direction that they're going in earnest. Hey, this is Peter from ShadowTrader.net, and I just wanted to thank you for watching this video. If you enjoyed this content, please hit the like and subscribe buttons. And if you'd like to trade live with me every day in my weekly options advisory, then check out the link in the description below. I wish you good trading, and I'll see you in the room.